Good evening, YouTubers. This is Martin H, and I'm making a YouTube video for my channel. It's called, Is the Price of Gold Predicting a Bear Market in Shares? Anyhow, here's the blog article. I'm going to upload it pretty soon. Anyways, back to the Krugerrands. I wrote this article because I see a lot of people predicting that the price of gold is predicting a market crash in share prices in stock markets around the world, predicting crashes in everything from tech shares to emerging market shares, and possibly predicting a spike in the dollar. I think it's possible we'll see a spike in the dollar, but just not yet. My view is the price of gold is going down because interest rates are going up. So, for example, 10-year rates are about approximately 1.3%. They're off a low of approximately 0.4, 0.5% back in August. Even prior to August, I think it was 0.4%. So a 10-year bond would yield you less than 0.5% or approximately 0.5%. Now a 10-year bond is yielding you approximately 1.33%, 1.25%. What I think is going on is when the Fed bailed everyone out, when we got various stimulus programs during the Trump administration and now with the Biden administration, this capital is flowing through the economy, and now we're seeing a boom. When we were in the dark part of the Depression, we saw a correction in the United States of, I believe, 20%. It might have been 10%. Now, an economic number where the economy contracts 5 or 10%, I don't think even happened during the Great Depression. I think it was less than 5%, but I might be wrong. But we contracted, I think, almost 10%, 20% in one of the quarters. I think overall it was 5, 6, 7%, something like that. Well, coming off that low now, with all this stimulus and all this money printing, we're now seeing the re-inflation of the economy, or reflating the economy, which has caused share prices to go through the roof, not just in the United States, but share prices all over the world, up to and including emerging markets. We've seen the dollar weaken recently. We've seen a real strong rally in the peso, the Mexican peso. It's since sold off a little bit recently in the last week or so, but we've seen emerging market currencies rally. We've seen the dollar really, not go down a lot, but go down a little bit. We've seen the euro rally from a low, I want to say 104, and now it's at 118, 119. I think it got as high as 125 or 126. I'm not sure. I didn't check where the euro is right now today, but the euro has sold off a little bit in the last few weeks, but the dollar really hasn't rallied that much. It rallied a little teeny tiny bit in the last week or so, but I believe the dollar and gold can rally together, and they also can also fall together. I think we're seeing that too right now. But basically what we're seeing is a reflation of the economy and the worldwide economy, and we came off such a low in the worldwide economy, or a depression, if you will, that we've seen share prices go through the roof. And I think that will continue to happen until about the fall of this year. I think we might level out then, and we might see unemployment. Unemployment is starting to rise a little bit in the United States. We might see employment leveling off here, and then unemployment not going down much. I think we're starting to see the early innings of unemployment going up, or rising unemployment. We'll have to wait and see what the numbers are. But if it does appear the economy is slowing by the fall, I would expect another bailout of the economy vis-a-vis the Fed. I would also expect the Fed to put pressure on the U.S. Congress to put out some kind of stimulus program. I would expect the same thing in the EU. Now, because the Eurozone is 12 different countries, or the Schengen countries, I'm not as familiar with there, but there will be pressure on Lagarde to do something to reflate the whole Eurozone economy. And the same thing will happen in Canada and the United Kingdom. In fact, we might be seeing a little bit of that now in the United Kingdom. But the pound has really rallied quite a bit. The euro has really rallied quite a bit. The Australian dollar and the New Zealand dollar has rallied quite a bit. I think that's because we're going through a kind of a big growth spurt because we went so far down when we went through that depression when the coronavirus happened. So now we're reflating up. We're seeing the price come down, price of gold come down, and a lot of market predictors, prognosticators are suggesting that there's going to be a crash. They're also suggesting the markets are overrated, which is true. The share markets and tech shares and many tech share companies don't even have earnings. Many companies in general don't have earnings. I've read something like half of the S&P 500 doesn't have earnings. I'm not sure how accurate that statement is, but it seems realistic to me. But despite the market being overvalued, I do believe the market is anticipating there's going to be more reflation, more stimulus programs from the Fed and the EU and from China. And that's why share prices are rallying and may continue to rally. They might not even fall soon or even crash soon or even in August, September. I'm just suggesting that's possibly when there could be one, and it'll scare the market so badly that the Fed will come and bail everyone out and print more money, and then they'll put pressure on Congress to do some kind of stimulus program, and the Treasury Department will come out with something like that, some kind of bailout, and the same version of that will happen in the EU and possibly some of the emerging market countries like Turkey, South Africa, and Mexico. Anyways, I don't think there's going to be a big crash. Other people do. I think we'll just see a minor sell-off, 10 or 15% possibly. And I think when we get the second round of stimulus, like in the fall, if we do, we might see gold turn around and start rallying again. But until then, I think we're going to have a rally in shares. We're going to have a rally in commodities, except for gold. We're going to have a rally in silver, oil, copper, natural gas. But natural gas is probably going up too because of the winter problems we're having in the pipeline shutdowns in Texas and things of that nature. But I do believe we'll still see a continuing rally in food prices or food commodities. And as that all comes out, we'll probably see higher inflation. The inflation number that prints will probably be higher than 3%. Now, will the Fed come in and raise interest rates? I really don't think so. I think the Fed's going to live with higher inflation. I also think the same thing's going to happen in the EU. This is partly why I don't think share prices will correct as much as people think, because the establishment and a lot of the hedge fund managers and money managers, as opposed to buying gold, they'll continue to buy share prices, mainly tech shares in emerging markets, and then they'll probably continue buying Bitcoin because in recent months, not even really years, but in recent months, there's been a lot of establishment type players stepping into the field of buying Bitcoin for the clients. If that becomes a major trend, I expect Bitcoin to really take off. I don't know where it'll end. 100,000, half a million, $1 million a coin. I don't know. Until we get to 100,000, that's all I think. We'll get to 100,000, and when we get there, we'll have to see what happens from there. I think ultimately, once we get through the fall, if we get more bailouts from the Biden administration and from the EU, and if there's another panic, like a small sell-off in shares, then I think we'll get another reflation from central banks and bailouts from central banks, and we'll start to see the price of gold rally, possibly up to $2,500 to $3,500 an ounce. Now, I'm not sure if this will take off to $10,000 an ounce or $5,000 like some people are saying, but I can see $2,500 gold or $3,500 gold pretty easy. I can see Bitcoin going to 100,000 pretty easy, which is just less than a double, because as I make this video, Bitcoin's at 55,000 per coin. Anyways, how should people position? I personally think people should still have a gold coin position, even though gold is in a bit of a bear market, or a bear market in an upper trend. This is just trending down, not a bear market, but just a trending bear market. I believe people should have a smaller position size, like 1 to 3%, maybe 5% in Bitcoin, 20-25% in gold, depending on your risk management and how you want to manage your risk. And consider getting into emerging markets, but again, small positions like you would do with Bitcoin, because you won't need a lot, because these emerging market economies can really rally. I'm speaking specifically of India and parts of Africa and parts of Asia, from India to Singapore to like Ethiopia, to other places in Africa, which I don't really want to name here. Anyways, that's my view on if we're going to see a market crash. I don't think so. I don't think gold is predicting a market crash. I just think interest rates are ticking up and gold's going down. And when we get possibly a little market correction in shares, I expect interest rates to go back down, and gold will probably start rallying again. And depending how ugly it gets, we may see the Fed lower rates. Rates are almost at zero, practically at zero. I think in the Eurozone they are actually at zero, but we'll see the Fed maybe go to zero and negative rates, and then more negative rates, not just in the Eurozone, but all over the world. Then we will see a big rally in gold and probably continuing rally in share prices and probably a continuing rally in Bitcoin. I expect Bitcoin, emerging markets, and gold to outperform, and selected commodities like oil, silver possibly. Just depends. But I expect that will continue. When will we get a big correction in shares? I'm not sure. Probably not until we get inflation of 5-6% and people realize the Fed is going to tolerate a much higher interest. Right now, I don't think the market believes that. But I think the Fed is going to tolerate a 3% number, 4% number, 5% number before they do anything serious like raise interest rates. Anyways, like, share, leave a comment, and visit the new blog. Thank you.